So banking and financial results in this quarter have been mixed bag, wherein we have seen PSU banks struggle during the quarter in terms of profitability as well as asset quality woes, wherein there have been several issues that have crept in terms of risk management and some asset quality divergence, which have overall eclipsed the sector segment. On the other hand, the retail facing private sector banks have performed in line with their trend. They have had strong growth momentum as well as maintained margins during the quarter. This quarter also was not a very significant difference from earlier performance, and they continue to be the outperformers in the whole space. On the corporate sector, facing private sector banks was the main surprise, because a couple of larger players came out with better than expected results. Now this quarter was very significant in terms of this was the beginning of the busy season, which is a very important phase for the Indian for the banking industry as a whole, as well as this was also a quarter where the outlook on the large corporate sector NPAs that has been impacting the system was to be given a sense by the management as well as by the numbers. So on that basis, private sector banks, corporate facing private sector banks have had a decent performance in this quarter, with no adverse movement in the asset quality front and maintained margins. On the PSU banking space, we have been cautious on the segment because of structural issues, risk management issues, as well as the slowdown in the overall credit demand. And this quarter has been pretty challenging for PSU names as well. Going forward, what we understand is that a big overhang would be how the macros behave, and especially the rising and the spikes in bond yields that we have been seeing, which has been very dependent or very influenced by how the macros and the government fiscal behaves. So on the outlook part, going forward, there is a significant overhang on the rising bond yields. We have seen over the last couple of months there have been instances where there have been fear in the market due to the government borrowing program as well as the macro indicators spoiling the show for India, and that has been reflected in the bond yields as well. That risk overhang will continue in the near term as well. We believe that that would keep some of the NBFCs as well as NBFCs in a range bound kind of a situation. We are still positive on consumer facing entities, banks which have a very strong retail and consumer facing franchise, and who have strong management as well as asset quality with strong balance sheet. We are positive on stocks like IndusInd Bank, HDFC Bank, and Bajaj Finserv, because we believe that all of them have a very strong business as well as a very strong balance sheet with them.